Hello everyone, welcome to Finance with Deepak Ray and I am Deepak. In today's video, we are going to understand one of the most important financial statement of the company, the balance sheet. If you are a student, accountant, financial professionals, business owner or preparing for the exam, this video will help you to understand the balance sheet in a very simple way. Now let's understand what is balance sheet. A balance sheet shows the financial position of a company on a particular date. It tells us what the company owns, what the company owes, and how much belongs to the owner. In simple word, asset equal to liabilities plus equity. This equation is the foundation of a balance sheet. Now let us understand the balance sheet using an example of ABC company. We will first look at the asset side. Assets are resources owned by the business that have economic value. Assets are divided into two parts, non-current assets and current assets. Non-current assets. These are long-term assets used for more than 1 year. Property, plant and equipment. These are physical assets like machinery, furniture, building, computer. They are used in normal business operation. Intangible assets. These are non-physical assets such as trademarks, software, brand value, patent. Even though we cannot touch them physically, they still have value. Long-term investment. These are investment held for more than 1 year to earn income or future growth. Deferred tax asset. Deferred tax asset arises when the company pays more tax earlier and can benefit in future years. Current assets. Current assets are expected to be converted into cash within 12 months. Example, inventory. Inventory means good or stock available for sale. Trade receivables. This is money receivable from customer for credit sales. Cash and bank. This is the most liquid asset available for daily operation. Short-term investment. Investment that can be converted into cash within 1 year. Prepaid expenses. Expenses paid in advance for future benefit. Example, rent paid in advance, insurance paid in advance. Accrued income. Income earned but not yet received. Now let us understand the other side of the balance sheet, liability and equity. Equity. Equity means the owner's share in the business after paying all liabilities. Example, share capital. Money invested by shareholder in the company. Reserve and surplus. Profit retained in the business for future growth. Non-current liabilities. These are long-term obligation payable after 1 year. Long-term borrowings. Loan repayables after more than 12 months. Deferred tax liability. Tax saved now but payable in future due to timing difference. Current liabilities. These are short-term obligation payable within 1 year. Trade payables. Money payables to the supplier. Short-term borrowing. Short-term loan taken for working capital needs. Duty and taxes. Taxes payable to government. Provision for expenses. Expected expenses relating to current year but payable later. Let's see the balance sheet of ABC company with the figures. In asset side, we have the non-current assets and the current asset. Under non-current asset, property, plant and equipment is 1 lakh rupees, intangible asset is 50,000 rupees, long-term investment is 50,000 rupees, and deferred tax asset is 10,000 rupees. So total non-current asset is 2 lakh 10,000 rupees. Under current asset, we have inventory of 80,000 rupees, trade receivable of 30,000 rupees, cash and bank of 70,000 rupees, short-term investment of 50,000 rupees, prepaid expenses of 5,000 rupees, accrued income of 30,000 rupees. So total current asset is 2,65,000 rupees. So total asset is 4,75,000 rupees. Now let's check the liability and equity part. Under equity, we have share capital of 3 lakh rupees, reserve and surplus of 24,550 rupees, So total equity is 3,24,550 rupees. Under liability, we have non-current liabilities, long-term borrowing of 70,000 rupees, deferred tax liability of 15,000 rupees. So total non-current liability is 85,000 rupees. Under current liabilities, we have trade payables of 30,000 rupees, short-term borrowing of 10,000 rupees, duties and taxes of 5,000 rupees, provision for expenses of 20,450 rupees. So total current liability is 65,450 rupees. So total liability and equity is 4,75,000 rupees. So as we discussed earlier, the asset should be equal to the equity and the liability. So we can see that the total asset is 4,75,000 rupees and the total liability and equity is 4,75,000 rupees, which means our balance sheet is correct. So in this video, we learned about what is balance sheet, type of assets, type of liabilities, equity, and the accounting equation. Understanding the balance sheet is very important for accounting, finance, taxation, auditing, and investment analysis. If you found this video helpful, please like the video, share this video, subscribe to the channel Finance with Deepak Ray. Thank you for watching.